Well, happy Tuesday evening to you. Chris Hare here, the multiple time world champion crypto cowboy, bringing you another Bitcoin nightly update. And we got a big move incoming, but I'm a little worried it's not the move that we were kind of expecting last night. It seems like my thesis that we've talked about over the past couple of weeks is starting to play out. I was bullish today. I took some long trades. They were kind of risky. I know we're at the top, but I felt like we were at a minimum retracement and it kind of acted like it wanted to run. So at 1 to 2%, it's not a big deal. We lost a trade. I'm still at 96% since the flash crash 2 weeks ago. So we're still making money. And if you use my 1 to 3% strategy, not a big deal. You take your loss and you make it up on the next one. These things compound. But let's get into everything. Let's figure out what's going on here. Currently, crypto fear and greed index measures market sentiment. We're at a 39. We were at a 42 yesterday. Last week, we were at a 28. And what I tell you every night is the best times that I like to buy in my spot bags are when we're in fear. You can see history doesn't repeat, but it rhymes. Every time we go into fear, we launch out. We may stay down for a little while, but eventually we come and have some kind of breakout. Same thing's going on here. We tried to get out of it, got to neutral. Now we're coming back down normal, and it's expected because we pulled back today. I said rate cuts were yesterday, and I was wrong. They are today, or they are tomorrow. I thought they were today, but the meeting started today. The rate cut announcement is tomorrow. 98% chance of that happening. My big fears, and we talked about this last night, is rate cuts are bullish to an extent, but they also cause a lot of uncertainty because of recession fears, and that's when you start getting a lot of rate cuts. So with that, markets don't like instability or uncertainty, so they pull back. That's kind of what happens. I'm a little worried that's what's happening here, but the charts will break into that when we get to it. Moving on to a Bitcoin liquidation heat map. This is what the market makers use to find your liquidity. They know where your stop losses and all your liquidation points are on your trades, and they just draw the charts back and forth, tracking liquidity. Anything to the top side is a short trade. Anything to the bottom side is a long trade. And you can see there's way more liquidations to the longs than there is to the shorts. You got a big bright pocket of liquidity right here at about 112,000. Another one going down to 108 and another one down to 106. Cumulatively, $904 million to up to about $120,000. But if you go to the downside, we're still at a huge imbalance, $2.3 billion, all the way down to about 102. So I think the consensus is that we're at least going to come down and try to grab some of this. I don't know if we grab all of it, but the charts are going to kind of give us a better idea of what's going on. So we're going to go ahead and get into that. We'll start off with the Bitcoin on the 4 hour. You can see we had a pretty good run going, and I took a long when we pulled back here, and it was my mistake. It was a foolish move, but sometimes you have to take a risk. Generally, they don't stop on the first. They come up and then they'll come back down. What I thought is we'd find support up around this 200 smooth moving average. That takes 200 of these candles and puts this fluid red line on the chart, and it works as really strong support and resistance. You can see I even had an alert set here to be looking for long trades. That's what that dashed line is, and we can take that off. And go ahead and take that off. There we go. Yeah, we want to delete it because we've already blown through it. All right, but you can see we've lost our daily 50 smooth moving average. We're headed down to the 4 hour smooth moving average. That takes 50 of these candles, puts another line on the chart, a fluid line, works as really good support and resistance. The smooth moving average, the charts really respect, and that's why I use it. But you can see the yellow line down here is the 50 simple moving average, and it's our kind of our last line of support before we start looking into lower targets. So if we don't find support on one of these and move up to the golden zone, we're going to have to start looking for lower targets, guys. The weekly 50 smooth moving average sits at about 102,000. And then you've got your extensions further down. The daily extension sits at around 86,000. I really hope we don't go that far. I don't think we will, but we can't take it off the table at this point. What I'd like to see is us really find support on this 50 simple moving average, work back up above this daily smooth moving average, and then head to our golden zones. But moving out to the daily, it's going to paint us a better picture. You can see I left the smart money concepts on again tonight because you can see there's really good support down here that we should be able to use to bounce. Bitcoin never did fill out completely all of this wick. It filled it out and then it left another wick. So what I think is probably happening As you can see, we lost the daily 50. We're kind of retesting it now, but what I think is we'll probably get a rejection off of this 50 simple moving average, and then we're going to work our way on down here. Your first stops are going to be at about 108,000. Bottom side of that golden zone sits at 103,000, and your 200 smooth moving average sits at about 98,000. So if we lose this 111,000 range, these targets are definitely in play. And the more I look at this, the more I think that's probably where we're going to end up. If for some reason we can reclaim this 50 and the 50 simple moving average, next targets to the upside are 117 to 101,000. If you can reclaim that, 132 to 141. The good thing about this, guys, the good thing about running down a little bit more, as long as we stay up above probably equilibrium or this bottom trend, I think it sets us up to have a bigger bull run. If we didn't, and you'll see this on the weekly, this is what they call an ascending pennant, a bull pennant, whatever you want to call it, and we're bullish until we fall out of it. What I was afraid of is that if we just retested and ran right there, I'm going to adjust this a little bit because I want to get down. This line here would have moved to here. And what happens is it makes that smaller. But we can see if we bounce off of that weekly 50 moving average, simple moving average right here at about 103,000. The pennant stays wide. You fill out about 70%, and that realistically gives you a target of $150,000, $160,000 before this run is over. That's where I'm at tonight. My concern is if we get down to 94 to 85,000, you get a change of characterization on that through smart money concepts. And then I get concerned about having a lower high, maybe up here to about 120,000 to maybe 118,000. So we're not out of the woods, but I think we're getting bullish. I just think we've got a little more downside before we're ready to make those runs. We've talked about this for 2 weeks, and I really think that's where we're at tonight. So that breaks it down. That gives you a pretty good idea of what's going on. I wanted to make sure you guys had a full understanding. I know I was pretty bullish last night, but things change. The markets change, and we're following the markets. We're not ahead of them. I don't like to catch falling knives. I got a little aggressive today, and it turned around and bit us. I did put some signals in the crypto school. You'll find the links to that in my description. I also post all of these charts. I posted them tonight with a little rundown of what my expectations are. But it happens. That's why we use 1%, 2%, 3% of our bag, and we trade small, and we trade consistently, and we do the same things over and over and over. We made a mistake today, but it's not at the end of the world. We're going to make that back in the next few trades. Like I said, if you count those 3 trades and the one a week and a half ago, we've lost 4 trades in the last 2 weeks out of about 25 or 30 we've taken. So I'm going to stick with that average. It's pretty darn good. And I know from the guys in the crypto school, several of them are making substantial amounts of money. So I'm happy with that. It happens. It's not a big deal. You gather up and you move on to the next one. It's the same way in the rodeo world. You're going to miss a cow. It's part of it. You're going to go home. You're going to pay that $1,500 entry fee, and you're going to go home without a penny in your pocket. Or you go to the rodeo and you come up short. You're just not fast enough on the day. It's just not your day. Bad days happen. It's all part of it. You have to learn to shake them off. You have to learn to move forward, and you have to learn to just keep doing the same thing you've been doing because it wins and it pays. But I'm going to wrap it up tonight. You'll also find a link to my X. There's a link to BitUnix to get you a sweet deal on trading. I believe there's a cash back option with it if you put in a deposit. So that'll get you set up and get you started on trading if that's what you're interested in. But I really appreciate you watching these videos. Go ahead and like it, hit the subscribe, tap the bell notification. You'll get updates as soon as we upload a video. And don't forget to leave us a comment. It helps the YouTube algorithm and it helps us reach more people. But I'm going to wrap it up. It's pretty chilly out here in the shop tonight. I've got a couple more videos that I'm going to drop tomorrow. We're going to record them tonight. Ethereum will drop in the morning. And that Caspa video, I didn't get around to it today, but we'll go ahead and drop it tomorrow and make sure you have it and you're ready to go. But with that, I'm going to close out tonight. Chris Hare, the Crypto Cowboy, thanks so much for watching, and we'll see you down the road.